Are you guys sick and tired of getting barely stopped out other than price absolutely going into your favor, hitting your take profit? Well, in this video, I'm going to show you guys exactly what you need to do to fix your take profit stop loss zones and to become more profitable just by adjusting your take profit and stop losses. So let's get right into the video. First and foremost, I'm going to show you guys an example first. My charts are already ready for next week, so I'm going to show you guys an example off of my journal. So let's go and enlarge this to 200% so I can show you guys a little bit better here. So I entered this trade coming out of the zone over here, which should have been in the 30-minute time frame, right? And I was expecting it to go down. I'm pretty sure these are lows right here. I didn't catch it on the screenshot, but these are lows down here. So that was a good stop loss, but what was bad was the take. I mean, that's a good take profit, but what was bad was the stop loss. The stop loss was not in the correct position. And what ended up happening is that we had just a minor pullback, stop me out, or then smoke my take profit. And what this really means is that I'm being greedy. You should not have just a small stop loss just so you can have a better risk to reward. That is not what you should be doing, and that is not how you should be trading whatsoever. What I should have done was put the stop loss above this zone, and I should not worry about the risk to reward, so I should give it a little bit more extra area for price to play out. Even if it's a 1.5 to 2, you should still be taking that trade, right? Because all of the best traders, especially if you're trading on prop firms, will trade a 1 to 1.5 to 1 to 2, right? So 1.5 is not a bad risk to reward. You just are going to be winning a lot more trades with a lower risk to reward like that, and you can always just risk more, right, to make more money. That's really how it goes. So let me show you guys like real-time example, right? Let's say price moved up here. It's coming back to retest the zone. Okay, so what's my stop loss and what's my take profit? Well, your take profit should be zones like area of interest, support, resistance, or it should be the highs, right? So one of the two. And the same goes for your stop loss. It should either be below a zone like support, resistance, area of interest, anything like that, lows, right? It should be a couple pips below that. Let's just say price came up into here, retested, and let's say there's like a bullish engulfing right here, and that's where I take my trade off of on the 4 hour, right? And it's a close. So my take profit's going to be all the way up here into this area of interest. And just like how it is right now, it's 1 to 2. You want to also take a look at what your areas are. So you have a minor 30-minute support, minor 30-minute support. You should not be taking your 4-hour stop losses based off of this. At that point, it should be based off the lows, so over here. So your stop loss should be a little bit below these lows, kind of like here, to give price a little bit more room to fluctuate, right? You want your stop loss somewhere where if you get stopped out, it's for sure wrong. You are in the wrong bias, you're taking the wrong trade. That's how your stop loss should go. If we start moving to the downside, we're going to be really close to crossing this moving average, because as we go up in price, this will continue to go up too, and then that retest, this will come down a little bit. So if this were to even come down here, we'd be crossing this moving average, which would be another confluence that we're in the wrong trade. So that's what you should simply be taking your trades off of. It's a 1 to 1.9 risk to reward, still a really good risk to reward. You would just risk a little bit more, like 2 to 3%. And that's another topic for another video on how much you should risk. But yeah, that's literally how you should be going based off of these lows or zones. Like if this area of interest on the 4-hour zone, right? If this was moved up to, let's just say it was this area, your stop loss would be a little bit below that area because that's an area of interest. That's what you should be basing it off of. But stop caring so much about the risk to reward. Stop trying to get a 1 to 10. It's not going to happen. Focus on the smaller ones. Focus on your progress throughout trading. Stop caring so much about the money. Focus on the process. As you trade more, you will see what works better and what doesn't work as good in regards to take profit and stop loss. If you don't want to get stopped out by a pip, put your stop loss a little bit lower than you usually would. Take the lower risk to reward and see what ends up happening. Because I promise you, just having a lower stop loss will make you a lot more profitable. Remember, stop loss is somewhere where if it hits that price, you're done. right? Your trade is not going in your favor at all. There is no, oh, I'm going to get stopped out by 1 pip, then it's going to go around. No, if it hits this point, it's going to go down to this area of interest down here, right? So that's how you should be putting your take profits and stop losses. Then let's quickly show you one other trade opportunity for the 30-minute, because I know some of you guys trade differently, right? So that's a 4-hour example. Let's go 30-minute example. So for this example, let's just say price continues to move down and hits this minor area of support on the 30-minute, or then we have a bullish engulfing off this 30-minute, right? So let's just say I took a buy off of, let's just say right here. Take profit's going to be these highs up here, overall area of interest, and then your stop loss. So you have a minor area of interest, you want your stop loss to be lower than that area of interest. Let's just say price moves somewhere like this, right? Let's just say price goes like this, it comes down just a little bit, comes back up, and then it has that bullish engulfing right there to then continue whichever direction, right? So let's just say that's what it is. Your stop loss at that point should be obviously a couple pips below. Take a look at your risk to reward. This is a 30-minute. This is probably going to execute the same day. Let's go down just a little bit more to give it a little bit more extra space to breathe, right? 1 to 1.5. That's still really good risk to reward. Okay, people who trade prop firms professionally, go look them up if you think I'm wrong. The top people who trade prop firms average 1 to 1.2 to 1 to 1.5 risk to reward. I swear to God. And they usually have like 90% win rates. Those are the top dogs we're talking about, right? Go look them up if you don't believe me. But let's just say here. So, like I said, overall, your stop loss should be a couple pips below this low, but you want a little bit more breathing space. If price ends up coming down, right? So let's just say this is the price still, and let's say you hit your entry signal and it comes all the way back down. Yeah, you're looking bearish, right? You're looking like this is going to just continue pushing to the downside to this 30-minute support down here, right? Because you're making lower highs and lower lows, right? So we're going to continue pushing to the downside. But like I said, that's how your stop loss should be placed. Also with this moving average right here, we're going to end up swapping that moving average, switching bearish and pushing to the downside, right? So that's just an example of what you could do in a 30-minute and a 4-hour example. Yeah, so that's literally all I got to do. Hope you guys enjoy videos like these. If you found it helpful, leave that like button, hit the subscribe button. It means the world to me. I'm so close to 200 subs. We're going to keep pumping out content for you guys, and I'll see you guys in the next one. Peace out.